In the stock market, it is pretty passive because once you find the right funds that you want to invest in, you can set it and forget it. There are many brokerages out there that will allow you to just set up an automatic, systemized system where your money is automatically invested every week, every 2 weeks, every month into your funds. And even when you get paid dividends, you can choose to have those dividends reinvested or deposited into a different bank account for you. When it comes to real estate, it's going to take a little bit more work. And the way it works is you're going to go out and find a property. You can look at single family homes, apartment complexes, office buildings, retail buildings, storage buildings. It does not really matter. But we're going to talk about single family homes to keep the numbers super simple. You can go out and buy a property like this in certain areas for $200,000. I know a lot of people are going to say, well, Jaspreet, where in the world can I find a property for $200,000? Go to Michigan. You'll find properties like this all day and night long that will show you the numbers that I'm about to show you. You find a property like this for $200,000, you're going to rent it out for, let's say, $2,000 a month, which is $24,000 a year in rental income. Now, the problem with that is not all of this is your profit because you got to pay your expenses. What are your expenses? You got to pay for property taxes, your insurance, your maintenance, your management fees, and if you have vacancy costs, that's coming out of your pocket. Now, I'm going to assume that you buy this property all cash to keep the numbers even simpler, but let's assume that you have $10,000 a year in expenses. Now, that means you have about $14,000 of profit in your bank account at the end of the year. Now your question might be, is this a good return? Is this a bad return? And the answer is, it depends. Depends what's good for you. So the way that you would calculate this is you take this $14,000 and then you divide it by the $200,000 you invested, because for the sake of this example, I'm assuming that you bought this property all cash. And what this means is you got a 7% cash on cash return on this property, almost like a dividend. This is the cash flow. Now that's what the money looks like in this hypothetical example. But the question is, how passive is this really? And this is going to depend on how good your team is, because I invest in real estate, and what I can tell you is real estate can be a big pain in the neck, or it could be very great if you have a good property manager. And I have worked with good property managers and I have worked with bad property managers. When you have a good property manager, it is very relieving, because now your time might be an hour a month or maybe a couple hours a month, depending on how many properties you own and how involved you want to be, maybe a little bit more or less depending on what you're doing. But really 1 or 2 hours a month should be enough, because now what your job is just to review the financial reports, make sure that things are getting paid because you have all the reports there, make sure that you're making money. You're not the one that's talking to the tenant. You're not the one that's fixing the toilets. You're not the one that's dealing with the city. You're not the one that's dealing with attorneys. You're not the one that's dealing with contractors. That's your property manager's job. And they shouldn't be bugging you for little issues. And they just need to write up a report for you at the end of the month. That way you can review it on your own free time just to make sure that things are working. So your job is to make sure that the property manager is working. That's how it works in an ideal world when you have a good property manager. When you don't have a good property manager, now it's stressful. Because now, number one, they're not doing the job. Number two, that means you're probably not getting paid. And number three, that means you got to come in now and make sure that things start to get turned around. Maybe you got to fire the property manager, get a new property manager, talk to attorneys, talk to contractors, talk to city people. It can be a big mess. And so when you don't have a good team, it can be very not passive. But when you have a good team and you could manage a property or multiple properties, then it can be very passive for you. If you enjoyed this clip and you want to continue your financial education journey, I have another video that I think you'll love. All you got to do is click that button right over there. And for those of you who want to stay up to date on the top finance and business news, you can join Market Briefs, my free financial newsletter, by clicking that button below. Thank you for watching, and I'll see you in the next one.